Hello, Market Insights watchers. Well, in Market Roundup, the Fed's favorite inflation gauge is out. Is a rate cut back on the table? And tech megatrends don't count autonomous vehicles out. A new data shows funding for AV startups is ramping up. And in Crypto Corner, we've heard you in the mailbags. Ian is here to share his latest insights on crypto's volatility. So let's get to it. Hi, Ian. How are you? Good to see you. Glad you're back.
Yeah, thanks. It's good to be back, Amber. Actually going on a little trip soon, so we'll be gone for the 4th of July. Any plans for the holiday?
Well, we're staying close to home this year, but it's always good to have a cookout and some family over. So that's the plan.
Are you like one of the people that shoots fireworks off in Florida?
No.
No. Okay. I like my fingers, by the way. I,
All the
s-
digits.
I saw somebody commented that like there are like dozens of Americans right now that, will be missing a finger in a few
Oh,
weeks.
oh, no.
Happy 4th of July.
So morbid, but true.
Yeah.
So sorry. Oh my God. Okay, everyone. Well, from fingers to the next topic. Before we begin, I have to say that the internet and the airwaves are actually filled with the latest innovations in the weight loss drug market known as GLP-1s,
hmm
and how they're really transforming many people's overall health dramatically. Well, I am pleased to announce that Ian, our very own Ian, has dived deep into this phenomenon and has uncovered not one, but three small biotech companies that have the potential to really gain from this health megatrend. For example, the first company he's recommending builds hardware that helps people safely use GLP-1 drugs, which is why it's now experiencing explosive growth. And guess what? The smart money is moving in. This is why we expect this small cap biotech stock to rip higher. So, to learn more, Ian has given a full detailed account on this stock, plus two other gems, including their names and their ticker symbols. So it's all in this new special report that he's put together. It's called the World's First $1 trillion drug. So to get your copy, please make sure to check out the details in the email accompanying this video or in the YouTube description section of this video just below. So Ian, that's pretty cool. I'm glad you have taken time to dive into that market.
Yeah, thanks for sharing that, Amber. I think that we've seen the moves with the GLP-1s, with Eli Lilly and Novo Nordisk, obviously being, the clear leaders here, but there are also other ways to invest in this trend.
Right.
And I think this is like a 10-year long
Mm.
transformation of the entire healthcare industry. Because when you look at some of the other diseases that they're now prescribing GLP-1s for, that it can actually help cure and prevent, it's pretty amazing. So I hope people can take a good look at this and, decide for themselves whether or not the investment is right for them. But, this is clearly going to be a massive area in pharma and biotech going forward. And excited to really get that report out to everyone.
That is awesome. So glad we're giving that opportunity to our watchers.
Mhm.
Okay, Ian and everyone in Market Roundup, as seen in this chart, May's core personal consumption expenditures, or core PCE deflator, the Fed's preferred inflation gauge, has posted. This indicator tracks overall price changes for goods and services purchased by consumers while stripping out volatile food and energy items. And as expected, May's core PCE gauge slowed, thereby supporting the case for a possible Fed rate cut this year. The PCE core gauge rose 0.08% in May, the smallest advance since November of 2020. Year over year, PCE rose 2.6%, which is the slowest pace since March 2021. Meanwhile, inflation-adjusted consumer spending, which is seen in this chart as well, posted a solid advance after a pullback in April, up 0.3%. Now, this is pushed higher by goods and fueled by a jump in incomes. Stock has actually gained on this news. Now, the next big economic number that we need to be watching It's June's jobs report, which will be posting Friday, July 5th. This report will show the state of the U.S. labor market. Economists are expecting a decline in payrolls to 188,000 from 272,000, while the unemployment rate will likely remain unchanged at 4%. So, Ian, you have any latest economic thoughts to share regarding, especially the jobs number that's coming out next week?
Yeah, it's hard. I mean, the last couple, well, we had some stronger than expected reports earlier this year, but they're starting to slow down. The
Right.
one thing I'm watching is that we came into this year with expectations that we'd have 6 rate cuts
Yeah.
by the Fed.
Mhm.
A couple months into the year, that changed to 3. 2 months ago, it changed to like 1 and none, right? Because we saw the economy was still strong. We had a hotter than expected CPI, I think 2 months ago, but then it slowed down a little bit. What I'm seeing now, Amber, and one of the reasons why it looks like the Nasdaq is breaking out today, is along with other, end of the quarter, end of the half year window dressing,
Mhm.
is that we're starting to factor in 2 to 3 rate cuts again. Okay, so the probabilities right now for 2 rate cuts are at 44%. It's about 50-50. A month ago, it was about 25% that we're going to get 2 cuts. There's also a 20% chance that we get 3 rate cuts.
Mhm.
I think that's going to continue higher. Like I think that we're trending in the direction that because we're seeing the PCE get into the Fed's range, and also the economy has started to slow down and they're not in a recession, anyway. We're starting to see the Fed, leaning towards cutting rates. And look, a little bit of conspiracy theory here.
Okay.
Okay. Usually the Fed helps out the incumbent president, right? The
Mhm.
incumbent president is the one who, hires these guys.
Mhm.
But, whoever it is, I think that Jerome Powell will do his best, let's say, like he's only human, to basically help out the incumbent president so he keeps his job. And, there might be a little bit of conspiracy theory there, but we're all human and like that's where we're probably trending is that the Fed is going to surprise with more rate cuts than expected. Um, I also think that the Fed, by cutting rates, is actually going to benefit small cap stocks a lot more. And the reason why is that we've seen a huge rally the last year and a half in mega cap tech. Okay, we're seeing the Nasdaq break out to new highs again today. You've seen Nvidia move up, Amazon, Apple, all
Mhm.
trading at all 52-week year annual all-time highs. When rates are high, these companies that have a lot of cash can basically invest that cash at 5%. And that is like another line stream of income for them in their earnings reports. It boosts their earnings. On the flip side, when you have small cap companies that don't have a lot of cash on their balance sheet, when rates are high, it's harder for them to raise money. So the small cap valuations have been significantly depressed over the last year and a half because of higher rates. And as we see these rates start to come down, you'll see these small cap valuations jump in comparison to the large caps. So I think that is a big, second half story. I do think that the Fed is likely going to cut more than people expect right now, and I think the biggest beneficiary are going to be the small caps of the market, which have been severely depressed for the last year and a half in comparison to where large cap is trading.
Okay, well, we are putting a pen and duly noting that forecast from you, Ian,
All
about that.
right.
Really good, really, really good. Okay, everyone, in tech megatrends, please don't count autonomous vehicles out. New findings from Crunchbase data show that since May 1st of this year, funding to autonomous driving startups is ramping up. Crunchbase found since May 1st, nearly $2.7 billion has poured into the sector. This multi-billion-dollar injection is significant because for the first 4 months of this year, less than 800 million was raised by startups in the autonomous driving industry. So, where is this funding originating? Where is it coming from? Well, here are the deals actually igniting the AV turnaround per Crunchbase. Quote, self-driving car startups, a wave actually led the reversal in early May when the London-based startup raised $1.05 billion in SoftBank-led round, marking one of the largest funding deals on record for the British startup. 2 weeks ago, auto giant General Motors, GM, actually agreed to pump another $850 million into San Francisco based Cruise, which is just restarting its driving programs in Phoenix, Arizona, Dallas, as well as Houston, Texas. And finally, just last week, a Toronto based autonomous trucking developer, Wabi, raised $200 million round, co led by Khosla Ventures and Uber. The company is looking to deploy driverless trucks as soon as next year. Now, these rounds now put venture funding in the sector on track to have the best year since 2021, when investments hit an incredible $12.7 billion, something that seemed really unfathomable just about 7 weeks ago, in quotes. So I'm thinking, Ian, this latest AV data goes hand in hand with your latest stock recommendation, or should I say recommendation, in the Strategic Fortunes model portfolio, Tesla, which we're re-recommending based on its potential big future with the robo-taxi rollout. So do you think this adds fuel to the fire of these in a good way for these venture capitalists to be funding AVs right now?
I mean, I think that the sector is starting to pick up steam,
Mm-hmm.
and we know that Elon has a big date coming up to talk
Mm-hmm.
about his robo-taxi.
Yes, he does.
Um, this is like one of those uh technologies where it's like it happens very slowly at first. Like we've been seeing these pilots happen in San Francisco and Austin, and then
Right.
all of a sudden it's all at once, right? Like
Mm-hmm.
imagine like the smartphone, 2005, like a lot of people still had those old Nokias or the old flip phones.
Yep.
Apple came around and maybe like not everyone got the first Apple iteration, but by 2, 3, 4 years later, it was like, why aren't you getting a smartphone? And I feel like autonomous vehicles are very similar to that in the sense that we had smartphones, the Palm Pilot, the BlackBerry, but it wasn't until like the iPhone really kind of catalyzed it. And I'm interested to see, what Elon says. The other thing I would note too is that one of the keys of AVs is that they have to process a lot of data very, very quickly.
Mm-hmm.
And what we're seeing in the hardware side, in the artificial intelligence side,
Mm-hmm.
is that NVIDIA especially is making chips that are just unfathomable from what they were 2 years ago. Okay, so these chips are getting a lot faster and they're also getting a lot cheaper.
Right.
And the one benefit of Tesla that I would say is like they've had this like quote unquote full self-driving program, right? But it's not full self-driving. You have to like kind of be there and watch the road. You don't want this thing to drive on its own. We
Right.
found that the autopilot data is significant. It's like safer than a regular driver,
Um,
which, regular drivers nowadays on their mobile phones, like watching Netflix all the time, it's just like not safe to drive around. But the Tesla, what I found fascinating, I think is the catalyst here is that it used to be like $15,000 if you wanted the FSD program, the full self-driving software.
mm-hmm.
Then it was like 10, and then it was 8,000. Then it was like, okay, let's do this monthly. So they did this monthly plan where it's $200 a month. Then they cut it to $100 a month.
Mm-hmm.
Okay. So, $100 a month, if you're driving a Tesla, like you can have the full self-driving package. You might as well get it. The key, though, is not the benefit to the consumer, it's the benefit to Tesla because it's going to lead to exponentially more people using the full self-driving model,
Right.
which they collect that data and will allow them to use these data sets to better train the new additions. Okay, so self-driving is never going to be perfect, right? But
Mm-mm.
you want to be like 99.99999% perfect, right? A human driver is not perfect either. But if we can show that a self-driving car is safer than a human, that adoption is going to accelerate. And as it accelerates, as we get these more data sets combined with the faster chip power, you're going to see a proliferation of these vehicles on the roads faster than most people are currently expecting. So, I think that's also one of these like 2020 trends that have been around, gone through the hype cycle. We
Mm-hmm.
had like the mania, then we had like the people got disillusioned. We'll never have self-driving cars, and now we're like at this kind of slope where this things are rolling out, things are happening. We heard about the self-driving car company that's working with Mobileye that released a new prototype just the other day. So, it's a really exciting thing, not for like just Tesla stock, but humanity in general. Everybody hates driving, especially if you got to drive a long way. And then also the cost of like shipping goods around the country with self-driving trucks. I mean, it's just going to that's one of these technologies that's massively going to bring down inflation, as in the years and decades ahead for the world. So very exciting.
Very exciting indeed. And I can relate with those long drives. I know you may be heading out on a trip, but I came back from a road trip and man, I was tired.
Yeah, we're flying.
Good, 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 good.
Yeah. No long road trips with little children.
No,
Not with a baby.
no, no, exactly. Okay. Well, Ian, thanks for all that information. So let's turn to Crypto Corner, backed by popular demand always. I'm glad you're here. Could you help us understand what's happening with crypto's volatility and what you're seeing right now?
Sure. I mean, like when we have these bull cycles, in order for us to get 10 and 20x gains, along the way, there's going to be sharp pullbacks.
Mm-hmm.
Say this over and over again. In the 2017 Bitcoin rally, which took Bitcoin from $1,000 to $20,000, there were 7 or 8 pullbacks of 20% or more. And I believe there were 4 pullbacks of 30%. Okay.
Mm-hmm.
We are still in this bull cycle. This is we barely brushed a new all-time high in Bitcoin. And one thing that I'm watching, Amber, is that early July, so this could happen as soon as early next week. So you might be watching this and it could have already happened.
Mm-hmm.
The SEC is going to approve an Ethereum ETF. And I think the market is not correctly pricing in the inflows, which means that the price of Ethereum is right now is not discounting how many people are going to add this to their portfolio via an ETF.
Mm-hmm.
And I've seen estimates all over the place from 5 to $20 billion. But the difference here, remember we had the Bitcoin ETF in January.
Mm-hmm.
When Bitcoin ETF was approved, months before you saw the price, really skyrocket, run from 20,000 to like 50,000. And then after the ETF was approved, the price dropped sharply. I believe the Ethereum ETF buyers, traders, are worried about what happened after the Bitcoin ETF. So they're not bidding it up like they did the Bitcoin ETF. So I don't think this is priced to the point that it's going to be so much easier for anyone who has a retirement account to add this asset to their portfolio. The other thing about this that no one seems to be talking about is that I've always made the case that Ethereum is better than Bitcoin, right? So the main difference between Bitcoin, which is a store of value, a store of digital value, nobody really spends Bitcoin. People buy it and they hold it like a form of digital gold. Ethereum has value in the sense that you need Ethereum cryptocurrency to build new digital infrastructure. And that could be anything from building decentralized finance networks where you can allow anyone to be a market maker, to building, decentralized protocols that allow you to borrow and lend,
Mm-hmm.
ways to provision different digital resources like cloud storage and network bandwidth, and also essentially the reinvention of the internet. And there's this concept out there called Web 3,
Mm-hmm.
right? Web 2 is essentially what we have now. It's like, Web 2 means that Web 1 was basically you can only read things. You remember like back in the 90s what the internet looked like?
Mm-hmm. I do.
Like you could just get information from the internet, right? That was Web 1. Web 2 came along in about 2004 with Facebook and YouTube. And Web 2 allowed you to not only get information from the internet, but allowed you to put information on the internet, right? So anyone can be a creator in Web 2. Web 3 is not only can you read like in Web 1, not only can you contribute, write, or WRITE, not right-handed.
Right.
Not only can you write to the internet, but you
Uh-huh.
can also own pieces of the internet. You can own these digital assets. Important because if you are an internet contributor, if you post videos on YouTube or Instagram, though that property is controlled by the platform. Okay, so if you have a huge Instagram following of, let's say, 10 million people, and you don't like Instagram, you got to go recreate this whole business somewhere else.
Mm-hmm.
With this idea of cryptocurrency and holding your digital assets, there will be these sort of decentralized social protocols where I can just take all my digital assets and port them to a new place because they're mine, you know, and also take my followers with me.
Mm-hmm.
And so that's why there's this kind of reinvention of the internet where you're contributing, but you actually get to also own that asset, and also going to give us back a lot of our digital privacy. And this is what you can build on top of Ethereum, which is why it's a bigger idea than Bitcoin, and why I believe that we will see this flippening happen at some point where the market value of Ethereum crosses the market value of Bitcoin. Now, obviously, Ethereum has other competitors. There's Solana, there's modular blockchains. There's Say protocol. There's Tezos. There's EOS. There's so many of these other so-called layer ones. But
Mm.
Ethereum has had the most traction, the most number of users. I mean, I would say Solana is probably a close second. But to me, that's the big vision of cryptocurrency, not necessarily, the digital store value, which is what Bitcoin is, but the recreation of everything digital, allowing us to actually own these digital assets. So Ethereum ETF is coming soon. Like I said, I think this is the price of Ethereum is not priced for how many inflows they could potentially get. And it's also going to awaken people up to what is Ethereum. Most people, they've heard of Bitcoin, maybe they've heard of Ethereum. They don't really know what it is. But
Mm.
now with the ETF, it's going to be a lot more education for investors. And I think when people see what it actually does, they'll be more convinced that it will be more valuable than Bitcoin in the future, as I believe.
Excellent, Ian. I concur with you 100%.
All right.
Okay, well, that's it for this week. We want to thank everyone for tuning in, as always. If you do have a question that you'd like us to share with readers or answer on air, please email us at marketinsights@bannionhill.com.
Awesome. Thanks so much, Amber, and have a great weekend and happy 4th of July if I don't talk to you.
Oh, of course, you too. Take care.
Bye-bye.
Bye.